The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 16th. Terrific Tuesday edition of today's Trader's Edge show. I'm your host, TV Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I. Just past 1 o'clock in the afternoon, I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Now's not too soon. 877-927-6648. We'd love to hear from you. Of course, you can call us at 727-445-1044 as well. So let's go ahead and get this show started. A belated start, that is. Sorry about that. But this is a terrific Tuesday. Of course, it's none other than Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up 51 points. She's traded 18,584. S&P down 7, trading at 2184. NASDAQ Composite off 19, trading at 5242. Russell is down 7 points. The DAX closed off 62. The FTSE down 47. Gold's up about $8, trading at 1355. Silver is flat, up a penny. Light sweet crude up 81 cents. She's trading at 46.55. Leading the charge here to the upside, you've got G&K Services up $14. That's nearly 18%. You've got Cintas Corp, the what do they do? They're the outfit company for restaurants, things like that, right? Up $5 or $7, I should say. Praxair up 5. Chipotle up about 4. Dick's Sporting Goods up 4. To the downside, you've got the Hanes Celestial Group counting issues that they've got. Doesn't sound good out there. Lockheed, counting issues. These guys have been open for a while. That's never a good thing. Lockheed Martin Corp, they're down about $7. Regeneron is off 6. Advanced Auto Parts down 6. Concho Resources, I just like saying Concho. That is down 474. Okay, so what are the markets doing? Of course, if you caught my little segment with Tom last night, I hope you did, at about 3:15, 3:20, I had shared with him that I believe that yesterday was a game of liar's poker. And what we needed to do as pattern recognition folks was to try to figure out who was the one that was lying. Was it the markets or was it the diverging patterns that were lying out there? And my suggestion was that yesterday was a top. That is still my suggestion. Let's go see if that suggestion, if that call holds any water or not. So let's go figure out what the markets are doing. Now, the most important, I won't say most important. There are several elements. We'll take a look at some of them, maybe not all, because my system was crashed again by that Skype, so I do not have everything back up and running like it should. But let's go take a look at what we do know right now. What are the signals? Now, this is intraday. The signal we're going to first look at here is going to be an end-of-day tool, but right now, as of 1:14, and we're looking at the bottom portion of my chart here as we take a look at the advanced decline oscillator. You might say, what the Sam heck is the advanced decline oscillator? Well, what it is, folks, it takes a look at each day's net advancing or declining issues for the New York Stock Exchange, the NASDAQ Composite, and the Dow. Those are the three that I'm able to run this tool on, easily run this tool on. Takes a look at those, and what it does, it must be a critical pause break here. We got a late start. My apology. But just stay there. Just have a sip of water. Maybe add a little bit of lemon to it, and then we come back. We'll talk about the advanced decline oscillators all below zero. That says who's in control. That's right. That says it's the bears, the sellers. We'll be right back, folks. Hi,
I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So before we went to that break, we were taking a look at three of the indices out here, three of the cash indices: New York Stock Exchange, NASDAQ Composite, the Dow Jones. And we're looking at the bottom portion of my screen out here where you see a blue line. You see, and I'll put my cursor here. So it's the very bottom portion of my screen where you see the blue line going up and down, not the green and the red line. Not that they don't mean anything, but we're just looking at those blue lines. We're looking at the zero line. You can see a horizontal, very thin green line going across there, and when that reading is above zero, the basic meaning is that it is the buyers that are in control of the market. When it is below zero, it tells us that the sellers are really in control of the market. Whether the market's going up or not, it's who is the one that really has the upper hand out here. Now we can see the New York Stock Exchange. Now I was mentioning how is that actually calculated. And that is, I think I said it, you're taking a look at the daily advanced decline information. Then what we're doing, we're massaging it. We're taking a look at that data, and we're looking at the difference between the 19 and the 39-day exponential moving average out there. So that is what that blue line represents. So that's what's referred to as an oscillator, right? An oscillator is telling you it's measuring the difference between two things out here. Those two things being the 19 and 39-day exponential moving average out there. Now you may say, well, why in the Sam heck did you pick those? And the answer would be, now don't let anybody tell us any differently. The answer is because what we are looking at here, it is rocket science. You see, the tool that we use, exponential moving averages, to the best of my knowledge and research, maybe you've got something different, but to the best of my knowledge, they really were developed and popularized by a guy named Peter Harlan. And he actually was, I think he's still alive. I don't recall if he's alive or not, but that doesn't matter. He was a rocket scientist. He was a really important rocket scientist. He's the guy going back into the 60s that was doing all of this by hand. All these calculations, when I say this by hand, he was working for the Jet Propulsion Laboratory. And so what he was doing was he was making sure that everything was in their proper orbits up there, and he was doing a lot of that work by hand. So, and computers came around, and he actually didn't call it an exponential moving average. He referred to them as trends, 1% trend, 5% trend, 10% trends, and so forth. But what they actually mathematically equate to is what we use today are these moving averages, exponential moving averages out here. So it's been around for a lot of years. There's no reason to mess with Texas since it's actually working out here. Now, what we can see today, so that's the explanation of what it is that's going on down there. Now, what we can see today, what's really interesting is the New York Stock Exchange, which has not been able to budge above the zero line. Yesterday, either intraday, it's been able to do it, but at the end of the day, and I hate when people use that, but I have to use that here because this is an end of the day calculation, so I'm not using it in the same way that the other people would use that. So at the close, how about this? We'll just say at the close of the session, which is really when we get the confirmation of what is the actual reading, it's been below zero, even with the market making new highs. Now, look, the advanced decline inside the New York Stock Exchange has been strong like bull, extremely strong like bull. Then people talk about volume, and the reality is the actual advanced decline volume line has been really strong. So there's no divergences there. But however, by utilizing a rocket scientist approach here to what's really going on with regard to the advanced decline data, it's showing this weakening out here. So that is message number one. Now we have that same message number two from the composite, NASDAQ composite. Message number three from the Dow out here. Now, why is that important? Well, that is important. I said I'm trying to get everything back up and running. Let me do this here. Let me switch over to this, see if this thing has fired up. If not, I can do it manually. Okay, this looks pretty good. So let me just put this chart up on my screen. Newsletter subscribers are going to know, they're going to recognize just this chart out here. Here is the NASDAQ composite. Remember, we looked at the NASDAQ composite, strong as can be out here. And what we know about it is that today, right now, as we speak, 122, the advanced decline oscillator reading is down below zero. Says sellers have control. What else do we have as signals at the moment? Well, we know that from that beautiful bottom that formed out here on June the 27th, out here. It was really the confirmation on June the 28th. We can see that yesterday is going to now mark, it looks like, unless there's some big, huge turnaround Tuesday, which I don't anticipate that's what we're going to see out here. That's just simply not the message of the markets. We can see that we are in wave number 7. We'll have a confirmed 7th wave move. You know how important that is. Do they always work? Of course not. But do you pay attention? Do the sphincter muscles start to tighten? They start to tighten if you're on the long side of this trade, and they start to get kind of excited if you're on the short side of the trade or looking for the short side of the trade. And what we're really looking for is the market to communicate to you and I. And seriously, that is what we're waiting for the market to do. And so far today, we have a bearish reversal signal. And we happen to have price below Stevie's red line, which is priced out at 52.5409. So we really have element number one, advanced decline oscillator tells us that price here that is buyers or sellers that are now in control. Number two, we've got a price relative strength divergent pattern that has been confirmed with so far has been confirmed with a bearish reversal signal. We have wave number 7 being confirmed with a bearish reversal signal. We have price, the price oscillator has turned down. And that says, okay, that's another confirming message that it is sellers that are in control out here. Now, where's price going to head to? You know, what we're going to do is we're really going to switch over and take a look at the futures, the equity futures contracts, because those can give us the signals intra-session, right? Because this is only traded in essence between 9:30 and 4, and the market's trading basically around the clock. So we're going to really take a look at price levels inside of the NQ out here, but inside the strong dog that is inside the market, it's now given us a signal. Now, how long is this retracement or correction going to last? I don't know. It would have been shorter, my opinion, is it would have been shorter if we didn't get all of the significant messages or indicators or divergences that form at tops and bottoms in the market. So we're just really going to have to play this, one step at a time. Now, it's not just the NASDAQ composite. We didn't talk about the S&P 500 yet. In the S&P 500, I don't have, there's just not good advanced decline data. Unfortunately, you can get it, and there was a guy that I used to get it from, and he's gone, which is a bummer. But nonetheless, what we can do with regard to the S&P 500 for its signal is just really a couple of things. One, we can take a look at the VIX index since it's correlating, and we took a look at this chart yesterday, and I said, this is a problem. As everybody's out there celebrating, I said, this is a problem. When you have higher closing readings on the VIX index, you're making higher lows and the market's making higher highs. That ends badly. It's always a question of when. And in this case here, by the way, where is the VIX index headed to? 1375. That's when we're really going to get a feel for how deep of a correction, if any real correction versus a retracement, is going to occur. Because once the VIX index, should it close above that 50-day exponential moving average, I don't have to tell you, you guys are experts. You guys are masters in the VIX index. And if you're not, you should really sign up for my newsletter service. We'll find some way to make you become an expert. In fact, I'm going to do another course on that and many other things out there just to assist my subscribers. I knew, even if you're not a subscriber, I want to assist you. But in any event here, 1375 is the next target. And the question becomes, if price closes above that, then we're looking at a deeper correction. Hey, guess what? In the S&P 500, guess what it did yesterday? It looks like it's done today. One of those seventh wave moves. Hey, tonight we're gonna have the godfather of the singing in the key of G. No, not Stevie Wonder. That'll be Basil Wonder. He's doing a workshop. Sign up for it, folks. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We've got the Dow. She's off 73 points right now. S&P is down 9. You know, we were taking a look at the S&P before we went to break. Now, the number one sector inside the S&P is actually the one that's given us the best signal out here that the market is also ready to retrace, and that happens to be the technology sector, the XLK. Now, we've got the XLK up on our screen, just like we did with the NASDAQ composite. It sort of makes sense that this would be following along. But if you take a look at that nice bottom that formed out here on June the 27th, you can see that yesterday now has marked a wave 7 to the upside. We can see that price is now clearly trading below Stevie's red line. And I want to show you just how important this red line is out here. Again, trading below it says our price oscillator is turned down. You might say, well, yeah, again, that's just the difference between two exponential moving averages. Voila, guess which ones we're using? 19 and 39. And you can see here I've got, no, that's not it. Oh, I can't. Well, I can put it up on my screen. Or give me a moment, I can do that. Let me go ahead and add this in there. I forgot everything had crashed as I was setting things up, you know, for the show, but so be it. There we go. So it's going to pop up on my screen here. Oh, let me just do this. It'll be easier if I can hide one of them and then open up the other. Yeah, I like to make things pretty easy for you guys, right, to visually. Learning is about visualization. So, okay, the top indicator here is the price oscillator. Now, when you take a look at this is pretty hard to tell as we speak right now that it's turned down. At least it's hard for my eyes. That's why, that's why typically I wear these things, to make sure I don't run in anything out here. But when I know where price is trading with regard to the red line out here, well, then I know exactly what's going on with regard to that price oscillator. So it has turned down. You can see that once it got above that level, oops, didn't mean to do that. I meant to do this out here. Once it got above this level, and that was on July 1st, you can see that this has always held as support. Or it's told us that price oscillator was rising. What has price been doing as well? Price has been rising. Even on any kind of bearish reversal signal, we kind of covered this yesterday with regard to a couple of things out there. Price, the biggest pullback, the biggest test was on August the 3rd out here, and really August the 4th, but still closes above those lines. It tells you that it is the buyers, the bulls, that are in control. Well, that is a different message today. Now, it doesn't tell us how far things are going to pull back. So what can we use to determine that? We give a number of different tools we can use. And certainly in the case of the XLK, we're going to just simply resort back to our task market profile. So the first level of any pullback here is going to be 46.74. You get below that, then you're back inside the range of the box, and that says 46.36 to 46.10 would be the area. And if you get below that, then that tells us that these longer-term patterns out here, like price relative strength divergent patterns, wave 7s, A to B equals CD patterns, so on and so forth, that you could be looking at a more significant top that is in place out here. So it's really all over the place. The messages couldn't be more clear. Yesterday, the messages were somewhat hidden. You had to really be aware of the different nuances, like we've talked about, right? The equal weighted ETF for the Qs, how it had just made it back to its highs, but we know the Qs had making higher highs. A divergence, is not a good thing unless the equal weight was able to take out its highs, which it hasn't done. So this is, folks, let's go look at the intraday charts, right? Let's go look for additional clues. And yeah, XLU, Duffy, is a weak segment out there, and that's utility, and that's a good point. And thank you for mentioning that. That is another divergence, which we don't cover too often out here. All right, I think I can do this without crashing the system. Pretty sure I can do this. But since Duffy mentioned it, we should. And he's right. We've got to give him credit for identifying that out there. There is a correlation between, believe it or not, the utility sector and what else? The Dow. I'm sure that I've got that somewhere in here. Just where is it? There we go. Here's the. Now I'm showing it by taking a look at the utility, Dow Jones Utility versus the XLU, but same thing out here. And to see how this has been making lower highs out here. This is the bottom. When I say this, I'm referring to the bottom portion of my screen out here. The market works best when this divergence doesn't exist. Yeah, they both work in the same direction out here. So, the utilities were sending out signals. I prefer, Duffy, just to use, General Electric as a better proxy for what the market is doing. So where's my GE chart out here? It should be probably right in front. Oh, it's right there, right in the very first spot, right? But the utilities is another one, making lower highs out here versus the market making higher highs. It never ends well. When we see that in place. And here it happens to be the equal-weighted ETF for the Q's top portion of my screen versus the bottom portion. And that is a type of divergence so there's just all these types of subtle, very important divergences. Now, let's get away from the divergence here. I did mention we would take a look with regard to declines, where are things going to head to, and I said we would use the daily futures contracts, and we're going to. So in the case of the ES Mini, we know the S&P has given us a nice topping signal. We know that the XLK, number one sector inside there, has given us a nice topping signal. We now know that we are down inside the daily TAS market profile, the box. So the very first move is going to be 2170. 2171 to 2170.75, somewhere right around there. That's the point of control. Now, this point of control is really this box is really in the hands of, the bias of this box is to the bears. See how that point of control, we've gotten rid of price. We don't need price to know when you're inside this box who has control, right? Who's going to exert the pressure? Who's going to, pump up the iron? In this case, pump up the iron to the downside. It is the bears, because that point of control closer to the top of the box. That doesn't mean that 2171 is not going to be a resting point. It should be the first resting point out here. But below that says that price runs to 2149. So if you are wondering where is the market going to make its next move to, it's we're going to call it 2150 in the S&P futures contract. That's where this retracement is going to take us to. Is it going to take us below that? I don't know. I don't know just yet. We'll take a look at patterns and measure things as that's happening, but that should be your expectation. Now, if you're long the market, does that mean you get out? No, not necessarily. I want to make sure, because I can give you reasons why this is going to be a nice, quick, swift retracement. That actually ought to be bought, for a couple of weeks before then the big one, before the real big one takes place. And it will be a big one. You want to make sure that you're in on that. In any event, but if we see a move below 2149, then that says, guess what? There are these other patterns that took a little bit longer to form out here, the seventh wave, so on and so forth. Then it's more serious than that. In either event, it is somewhat serious. Now, in the case of the NQ, here's where we're going to get another message. So this may be actually the better message of the two, because today happens to be a brand new profile. Now, let's turn price off. And if I said to you, hey, tell me which inside this box out here, which is between 47.70 and 48.16, who is it that actually is in control of that price area? And you would say, geez, based on everything that you've shared, maybe John Logan has shared this stuff with you as well, you'd say it's pretty simple. It's the sellers that are in control. So brand new box forms today, point of control closer to the top of the box. This says that the NQ is headed to 47.70. And some change out here. So 47.70 is the next move. Now, why is that important? Well, because if that level fails, which I suspect it will, but I don't know for sure, 47.70, then that's going to give us an idea that, hey, there is something more serious going on. It's not going to necessarily do it today, but it is going to do it. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 72, S&P's down about 10 right now. So how will we know if any of these sage forecasts by Steve-O's son here are going to come true? We're just going to pay attention to the charts, and we've got a nice signal to be focused on that is coming from, I believe it's the 2-hour chart here of the Dow. So, you know, here's, yeah, it is. Inside the Dow, let me get rid of this. That doesn't belong there. What a darn shame that the whole system it rebooted. There was a bunch of work that I didn't save. I didn't anticipate it. But here, that's neither here nor there. What's the signal? Well, a couple of hours ago, and we're looking at the Dow futures contract, by the way. This is at 10 o'clock. So at 10 o'clock this morning, the low of the Dow futures, I'm going to give you that price point. That is 18,508. That's the number you're going to want to watch, because if the Dow futures close below that, we know that it's a hammer candle. And if you close below a hammer candle, if you're long, you're wrong. Now, what's that mean? It means that price is going to fall to the next area. That next area on this chart out here says we're really going to come back to this level right here. I'll just put a blue horizontal line across my screen, this big, huge breakout right here. And that in the Dow futures is about 18,430. There's also a hammer candle that had formed back here that held this support back on about 4 o'clock in the afternoon on August the 8th. You can see you had that wide-ranging bar out here that was on the trading session of August the, August 5th. So that just becomes a logical area of support. Now, if you break through that, then price comes all the way back to the bottom of the that breakout session, which is right around the 18,292. But we want to take these things one step at a time. We know where the bulls are hanging out. And we know that how? Well, because they can't hide from us. I mean, they have to show their head out here. And they do that by creating, very specific signals. We don't look at it like we do not look at every Japanese candlestick out here. Many of them don't really have much in the way of meaning, at least for you and I. And so we can see a nice little piercing candle back here at 4 o'clock, at the 4 o'clock close on August the 12th. So we can clearly see where they're hanging out, and we've got this hammer candle. And so when these levels start to fail, should they start to fail, that's going to be our indication of, okay, the next step is in place out here. And you just simply go back to those daily numbers that we were taking a look at. Now, we didn't take a look at a number for the daily futures contract. We're only looking at a 2-hour chart. Inside the daily, the number to be watching. And that hammer candle, by the way, you can see the importance of that is also a result of, here's a daily candle. You can see price is trying to stay above the top of its TAS market profile at 18,521. So you get below 18,521, it's really below that hammer candle. That's the key out here, and that's really the low of the session, which is 18,508. I believe that's the number that I gave you. I think that's the number that I gave you out there. So getting below that, then you're really looking at 18,435 and then 18,349 inside of the Dow futures out here. So we've got signals, a smorgasbord of signals. Market's trying to fight, but watch that hammer candle inside the Dow. We don't have on the 2-hour chart. I don't believe we do. Let me go take a look here. We do not have a hammer candle at all. This is the NASDAQ that we're taking a look at. So we don't have that on a 2-hour chart. Inside the ES Mini, I don't believe that generated a bullish reversal signal. It did not. So you can see it's just coming back here to those same candle sessions from August the 12th out here. So I'm going with the Dow as really being the next big signal to you and I. But we already have the signals, right? I mean, are the charts helping you to see these patterns that are out here, beautiful patterns that are out here that give us these signals so that both you and I, we don't have to listen to the minutia that's on the channels out here, other than it's really for entertainment purposes, or to have on. But really these days you really ought to have, you got to have the Olympics on. Got to watch that Usain Bolt guy. I mean, how do you get he's got the last name as Bolt, for goodness sakes. How does that happen? I'm assuming that's really what his last name is out there, but that's a beautiful thing. In any event, okay, so that's really that's my take. That's the charts take on the markets, where they're headed to. We're going to go ahead and, as always, take this stuff one thing at a time. But we got signals out here, all over the place. Okay, so what do we look at next? What do we look at next out here? Do you have that same chart for the R2K? What's the R2K? R2K. The Russell 2000. Hello. Hey, Duffy, just take I say that the things happen to or for us, not to us, and you got to take a little 2x4. Every now and then, if you guys could just, through my screen, take that 2x4, whack me upside the head, then, voila, we would be good out there. So I got it. I know R2K. I got it. So sorry about that. Just a little bit slow. Let's go take a look at. We can take a look at both, but let's go see. Let's what's going to pop up first here. Let's go take a look at the Russell 2000. Let's take a look at the IWM. You asked for the IWM. Let's go take a look at the IWM. Boom. Let's just go ahead and put that in here. And so there we go. We'll populate this. ISM. That's a little bit different than IWM. I also have these, fat fingers, and so my typing is behind the scenes. So let's go ahead and take a look at the wave counts out here. Let's come from the low on June 28th. Wave 7 now yesterday, so that would appear to be confirmed. The IWM, as we take a look at it, today's bar is an inside bar. So we don't have a reversal signal here inside of the IWM. The inside bar has nothing bearish about an inside bar. Price oscillator has begun to turn down. We know that because we can see the price is trading down below the Stevie's red line out here. So, where is it likely to head to? The IWM is back inside the box. It's likely to head to 120.23 or 120.98 out there, Duffy. That's my take as to where it is headed to. If we look at, an intraday chart of the Russell 2000, we can see that it has completed a 1 to almost a 1 to 2 A to B equals CD to the downside out here. And you've got your nice little bullish reversal signal. Price, this is a 30-minute chart that we're looking at. So you get that bullish signal. What does price do? Price tries to get up and get above and turn up its price oscillator by getting to that red line. Has not been able to do that. So in the case of the Russell 2000, the level, Duffy, that really I think you're watching for, is really where this thing had broken out. And you can see that is the level there. You got that wide-ranging bar. Let me get my crosshair out here. This is a wide-ranging bar. It took place at 10 o'clock yesterday. Prices pulled back. So if the market were going to be bullish, the IWM, then prices come back to a breakout area. We're not looking at volume. We're just simply taking a look at wide-ranging bars. We can see that many buyers out here thought that same thing. And they could be right. I don't think they are. But many buyers thought that same thing, which is why back here at this would be 1 o'clock. Yeah, 1 o'clock already. Is that 1 o'clock, 12 o'clock, 12:30, where we saw that nice little piercing candle form out here. So does that help answer your question there, Duff, with regard to the IWM, what it's doing, and take a look at it on the intraday charts as well as on the daily out here? I hope that it does. Okay. So so now we've got. Let's go take a look at. I tell you what, we're going to go to break here in just a few minutes. I'll check my phone, see if there's any email requests that have come in here. As we go into the last segment, get to those. The Dow's off 65, S&P's down 9. NASDAQ Composite down 25 points. This is Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So no special requests that came in that I see. So let's go ahead and take a look at, during this last segment here, this next 4 minutes, let's go look at some individual stocks and see what's going on out there. I see they're talking about six-packs and pizza. I haven't read the comments inside the Tiger's Den, so that means we ought to go, must things happen for us, not to us. That means we ought to probably go take a look at Boston Beer. Sam Adams out here trading up about $7. Got a nice move so far today, about 114,000 shares behind that move. Let me go ahead and put the volume indicator out here and see just whether or not that is decent volume for Sam Adams. Doesn't sound like a lot, but, you know, and so we take a look at Sam Adams. Looks like there's a trend line, no, a channel line, even better yet, that it is trying to break through. So it is trying to get through a level of resistance. Maybe this looks better on a weekly chart. Let's just put that out here. Yeah, so here's our long-term weekly channel line for Sam Adams. And you can see that this channel line has really acted as really good resistance. So it's trading right up into it as we speak right now. This is going to be, it's only Tuesday. If it can close above this, you might say, where's this? Well, it happens to be both a trend line, channel line, as well as the top of a weekly and daily TAS market profile. 192.03 is the daily, 191.18 is the weekly, and it's trading right now at 191.18. It's trading 192.18. So it's got a, you know, clearing it by a buck is not a big deal. Now, there was some big volume in here the week that began July 18th. That was 1.8 million shares to the upside. So Sam Adams, it's either up against resistance, which would then mean if it can't bust through it, it probably will pull back to about the 175 level and just meander around here. Now, neither of us, you or I, assuming there's only two of us out here, are going to get too worked up if this thing keeps moving sideways, and that's how it breaks through this price channel out here. But if it can break it this week with some conviction to move to the upside, well, then that says that, you know, you've got a change in trend in the case of Boston Beer, Sam Adams. So that's what that chart it looks like. Let's take a look at something to the downside. Let's look at that Haynes Celestial, who apparently... you know, apparently they've got some accounting issues out here. So we all know the Dewey, Hookham, and Howe firm out there, and it looks like that is what has transpired. Now, this is a weekly chart here. You can see, you know, just massive volume of shares just being dumped out here. So this could actually be a huge A to B equals C to the downside. Now, maybe that actually puts it out of business. And I think they have good product, right? They just have got lousy accountants or something. Is that the deal out here? But the A to B equals CD to the downside. No, it's not out of business. It says $19.46 or $9.25 out here. But basically, you know, that's a weekly chart, and it looks about as bad as you can get out here. If I put the daily, you can see that just simply. So, you know, the very first, the next area where this is headed to is probably the 35 area, but it looks bad. I wouldn't buy it. That is for sure. And there's no reason that I can see why someone would want to go ahead and try to pick up a Haynes Celestial out here, down with some massive volume, 33 million shares for the day. So, folks, you got the numbers. I hope you got the numbers. You have the numbers. I gave you the numbers to focus on and pay attention to. Remember, inside of the Dow futures contract, it's going to be that hammer candle. That is 18,508. Any moves below that, a close below that, hey, whether it's today or it's tonight, that's going to send a signal of continued pressure in the markets unless this turns out to be turnaround Tuesday, which it could. David White, who's up next, you know, he could go ahead and light the fire to the upside for all I know. Maybe it would be Tom O'Brien from 3 to 5, or maybe even Andy Heck from 5 to 6. He might be the one that would light the fuse. But I am saying no fireworks to the upside. So, folks, buckle up. Stay tuned. We've got some great shows, and be ready for the markets to pull back for the rest of today, tomorrow, Wednesday, Thursday, and Friday. Folks, we'll see you on Wonderful Wednesday. Take care. Have a great day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.